All right, so the topic here today, Rob, we're getting a lot of questions coming around all different sorts of topics. So we want to handle what is term life insurance and is it right for you? So Rob, let's get into this a little bit and kind of just start out with what is term life insurance?
Yeah, so thank you for that question. It's a great question, and we get asked that question all the time. One of the things I do want to say is because in the industry itself, folks that don't sell term insurance, they like to say how bad it is, right? So we are not here to say that at all. As a matter of fact, I know my first policy was a term policy, and some of my policies actually have term insurance inside them.
Right.
So if it's done the right way with the right education, the right information, right, not just term insurance and invest the difference, that was a what do you call that? Kindergarten nursery rhyme, right?
Yep.
That was a nursery rhyme that made A.L. Williams, I believe, a whole bunch of money because what he said, everybody in the world should buy term and invest the difference in a 401k. Now, what we like to talk about for all you good folks out there is, okay, what is specific for you? What's going on in your world? Are you married? Are you single? Do you have one kid? Do you have two kids? Do you have three kids? Do you want to think about how college is going to be paid for? Or you're not going to pay for college. What about your spouse? Crazy thing. I was at an event the other night, and I was talking to somebody, and I always get shocked when I hear this, that I don't want to have too much insurance because I don't want my wife to have a lot of money. I hear that so much. Not so much, but I hear it enough to it's like, wow, wait a minute. Dude, what's up with that?
Makes you take a step back, right?
Like,
when you hear
don't
it?
you want your wife and kids to have a safe financial landing? And the impression was, well, just enough to get by, right? So to your question, term insurance, right?
Yeah.
So term is temporary insurance, right? It's considered in some circles renter's insurance. I'm not going to say it as we're knocking on it. But look, if you're in your 20s starting a family and you want to be able to tap into the future value of what you're worth, and a term policy could buy you $1 million death benefit versus a whole life, which on that same dollar may be able to buy you a $50,000 policy, I'm saying go with the term, but here's the education. All term expires at some point when the term limit is up, right?
Yes.
And more importantly, and Eddie, please chime in on this, there's always a statistic out there, and me and Eddie are the first ones to tell you, we're not fiduciaries. Go check everything we say. Make sure you're speaking with your accountant, you're speaking with your attorney, your other advisor, your fiduciary. But here's the thing. As I understand it, 95 or 90% of term policies expire worthless, meaning that you're either too healthy and you outlive the term, or at some point it's replaced. The insurance carriers, they're geniuses, right? So they know their biggest ticket item, the way they make a lot of money, is not on whole life and paying out that death benefit because there's a greater chance that they will, but it's really on not paying death benefits on term insurance.
Yeah, absolutely. I think, if you look at what insurance carriers do, they base insurance or they price it based on risk. So term insurance is cheap today when you're young and healthy because the risk of the risk of them having to pay that death benefit is very finite. Like you said, maybe 5%, 2%, something like that of those policies actually pay a death benefit. Most expire.
Yeah. And what's interesting is I've been doing this since '08. I think that there's been two people that I know of that had passed away prior to age 65.
Yeah.
That's an interesting statistic.
So, on this with term insurance, people want to know, well, who should be signing up for it? And I think you touched on it a little bit.
You want to go deeper?
Yeah.
Yeah. So once again, let's talk about the person out of college or starting a family, or even, listen, if you're a business owner, right? And early stages business where you want to be able to have protection, buy-sell agreements with your partners, and there's not enough money yet in the company to pay for, let's call more advanced planning where you would use whole life in that buy-sell, you can use term. And the reason why that's important is if Eddie and I are partners and we think the business is worth $2 million, and God forbid if Eddie shuffled off this mortal coil, that means Eddie's wife is my business partner, although I love your wife, she's a good person, but I'm not sure if I want to report to her on a monthly basis about
Probably
revenues.
not.
So I'd rather the death benefit pay your wife. Now I own the company outright. And if the company's new and if the revenues aren't there, you may want to use term.
Yeah.
Right? Eventually you can convert it to whole life once you understand educationally how these products work.
Yeah. So, and that's another good segue into the next question is So what are the benefits that come with term life insurance?
For me, I have about $12 million in death benefit.
Right.
Not all of it's whole life. And part of it is term. And that part of the term is really what I'm banking on is the future value of who I am, right? I do have 3 children. My wife is my business partner. We own multiple businesses. And God forbid, if I did shuffle off this mortal coil, I not only want to make sure that college is paid for, but there's money set up for each child that we have. But also for my wife, from a business continuity standpoint, check that off. Creating generational wealth, check that off. And the proper trust and everything else that need to be set up.
Yep.
So for me, I slowly convert my part of my policy that is term into whole life.
So what? Yeah. So talk a little bit about that. What does conversion mean? What is that?
So if you're an entrepreneur, and this just isn't for the entrepreneur.
No, this is for everyday people.
But to
right?
answer the question specific to me, right?
Yeah.
As an entrepreneur and as my businesses expand and my revenues increase, I always love putting my money inside the cash value whole life insurance.
Okay.
The reason why is because, and this is a term question, but the reason why is because not only is there inherent guarantees by state law and by contract,
right,
but that money, when you leverage it, unlike stocks or bonds, you get to leverage 100% almost of what your cash value is. So if I had a bond portfolio that was $1 million, which I don't, just hypothetically speaking, if there was a bond portfolio, I could leverage approximately 60%. If there was a stock portfolio, even if it was diversified, I could leverage approximately 50%. However, cash value, I could leverage all of it.
That's incredible.
And I love doing that for creating my own bank and leveraging opportunities for businesses to grow.
And when you're doing those conversions, basically you're accomplishing taking that temporary death benefit and turning it into permanent death benefit as well.
Yes.
Right?
Yes. Because once it goes from term, to all you folks out there, to whole life, you're no longer subjected to the term limit. And once you're in retirement, if you do have a death benefit that's tied to whole life, which means basically it's not going to expire if you do it the right way, that means you could look at that death benefit differently in life than if it was a term death benefit. Because if it was a term death benefit, you can't spend assets down because that term death benefit won't be able to replace it, whereas the whole life death benefit can replace whatever you spend down in life, provided you do it the right way.
And those conversions, new medical data that they need, or what does that look like?
I think per carrier, right? You can convert it up to a certain amount of years.
Yep.
You'd have to look at the fine print on that. I don't think it's a new medical as far as a nurse coming out, but it may be a checkup on your medical history since you first bought the policy.
So essentially, if somebody's young and healthy, but maybe they don't have the cash flow, this is a way to lock in their good health for a future date. And obviously, depending on the carrier and the terms of that term policy, you could convert it without having to go through the pain of giving blood or whatever that looks like.
Yeah, so you're saying like the 25-year-old that buys a $2 million death benefit, when they get to 30, 35, and whoever the age is, and they begin to make more money, they could start to convert a portion, not the whole thing, right?
Right.
Portions
Part
of that to whole life.
Exactly. Yeah. No, those are great features. Are there traps that people could fall into when buying term insurance?
It's interesting. That's a general question.
Yeah.
Right? So whenever we have these videos, I want to speak direct. In general terms, there is traps if you're not educated. Meaning, some folks actually buy term insurance, and when the term and they really believe this isn't fake confusion. But let's say somebody buys a 20-year term.
Yep.
And I'm just going to use a hypothetical number. Let's say it's $1,000 a year. And now in year 21 to keep it, it goes from 1,000 to like 25,000.
Yeah.
And then the year after that, it goes to 100,000, and they can't. Although it was in the illustration from the very beginning, they can't believe it's happening. And the trap, to Eddie's point, is that person that bought the term 20 years ago. Now it's year 21, and for whatever reason, medically they're uninsurable. That becomes a tough conversation. Because now, in the transition of wealth accumulation, money you're saving, to wealth distribution, money you're spending in retirement, if there's no death benefit, that changes the game a little bit.
Yeah. And to speak on that even further, right, this 25-year-old that buys a term policy, and then 20 years later, that policy is expiring. Now they They're like, oh, I'll just go get more term insurance. Well,
They think it's the same
expecting
price.
to pay that same price.
Yeah. And it's significantly higher.
Significantly higher. So even if they're not medically challenged and can get the insurance, all of a sudden now they're paying more and more costs. And the other thing, too, that I think about as a trap around this, Rob, is, when we look at the lifespan of people and the retirement ages of people, right? Like Social Security full retirement is what? It's 70 years old now for a lot of folks, at least in my
And the portion
generation.
of that is taxed. Is that correct?
Sure.
Yep.
But forget about that, right? It used to be that you could start collecting you can start collecting at 62. They're just going to reduce you, right?
Because they don't want to run out of money.
Exactly. So they continually move out that full retirement age. Yep. And so the idea of like, oh, I'm 35 and I'm going to buy a 30-year term, and by 65 I'm going to be retired, I'm going to have no bills, I'm going to have all this stuff. That doesn't always work out in the plan of life. And some people may continue working. And if term life insurance is meant for income replacement, well, what's the cost of insurance when you're 65, right?
Yeah, well, great. So let's play with this. And folks, pay attention. Please grab a pen. This is important. What Eddie just said is powerful. He just talked about the cost of term for 20 years, from 45 to 65. Let's play with that. But remember, once that death benefit is gone, you still got to figure out that death benefit in your calculation from 65 to age 90 when the person does pass away. And that death benefit not being able to be part of the overall planning and retirement becomes a much bigger cost over time when you factor in lost opportunity cost, as well as the cost of insurance going forward if you were going to stay in that same term bucket. That's a lot.
Right.
And if you have any questions, go ahead and click the link below.
Yeah.
Reach out to one of the members here at Epic. They will take you through a deeper conversation on that. But losing the term death benefit in retirement is not just losing the death benefit, but also that 30-year retirement or 25-year stretch in retirement on what that death benefit can do for you while you're alive.
Yeah, yeah. And I think, kind of to wrap this up, one of the last things, and we touched on this, right? But people want to know, well, do you recommend term life insurance? Because I hear you guys talk about IULs. I hear you guys talk about whole life. I hear you guys talk about all these financial strategies. Do you recommend term life insurance?
Once again, in general terms, I'm not going to just openly say buy term and invest the difference, just like I'm not going to just say just go buy whole life. What I am going to say is this, and thank you for that access. Based on each person's circumstance and situation, and as we go through the process of looking at the insurance part of the overall planning, we believe that, whatever kind of death benefit is, if the death benefit needs to be higher based on whatever the outlay is, that term part of that plan, if with whole life and universal is important, or if you're just starting out and you can only save like $50 or $100 a month, we in that situation would definitely pivot to term that could eventually be converted.
That's awesome. So, folks, hopefully this answers a lot of your questions around term. Obviously, if it fits the budget, the first and most important thing you want to do with life insurance is make sure you're protecting your income. Make sure you're protecting your family. Like the people said I want them to just have enough. Is that really what you want for your family? Is that the financial legacy that you want to leave for them? Just enough?
I do have one thing.
Yeah.
If you are concerned about, God forbid if your wife decided to date the trainer at the gym, and or if your husband decided to date the trophy wife,
right,
you do have post-mortem control as far as the language of the will and the estate planning, so you can make sure that the new spouse can't have access to all the money.
I talked to an estate planning.
Always talk to an estate attorney. Don't take my word for it.
I talked to an estate planning attorney once that said he told his wife that in the conditions of the will and the money that would be left, his urn had to be on the mantle and they had to look at it all the time and do it.
I love it.
I think he was half joking, but
no, he was serious. Yeah, he was serious. Well, thanks for checking in, folks. Thanks for the questions, and we look to serve, contribute every day.
Thanks for all the information and the content, Rob. Hopefully this answers your questions surrounding term insurance and you have a little better idea. If you're ready to take that next step, maybe you're looking for term insurance yourself, if you click the link below, one of the team members will reach out and help walk you through the success process.